Hello, everyone, and welcome to the July webinar of New Growth Women's Business Center's webinar series. I am Lakin Coleman. I'm the business counselor for the New Growth Women's Business Center. And today we have Bree and Valissa, and they are from Academy Bank. I forgot to change my slides per usual. They are from Academy Bank, and we are going to be learning about business budgeting. And then next week, we want you to stay tuned or tune in for our personal budgeting. A little bit about the New Growth Women's Business Center is we serve 13 rural counties in Missouri and 2 in Kansas. We're a not-for-profit resource backed by the SBA, and we offer technical assistance, networking, access to capital, and business training. And during this webinar, questions are encouraged in the question and answer section, or feel free to utilize the chat. And this webinar is being recorded. The recording is available on YouTube following the webinar. And without further ado, I'm going to turn it over to Bree and Valissa. Once I stop sharing, there we go.
Hey, my name is Bree and this is Valissa, and we will be going over some financial management. It does also have business budgeting also, so we can go ahead and get started. Can you see my screen, Lakin?
I cannot.
You cannot. Okay. There we go.
Now you're cooking.
Perfect. All right. So financial management for small businesses. So this is going to be our agenda. There is a participation packet that does have a pretest and learning objectives. It is more detailed because we wouldn't be able to go over everything in depth. We're going to be going over budgeting, bookkeeping, financial statements, business financing, and key points to remember.
And I actually cannot see your screen. It just says that you started sharing your screen. There we go. There's your slideshow.
Oh, okay. I guess I need to start doing that. Okay. So learning objectives. So we're going to explain the concept of financial management, identify financial management practices, rules, and tools commonly available to small businesses, and explain how financial management practices, rules, and tools work. We're also going to be talking about financing for growing businesses, financing working capital, and financing fixed assets, and starting up financing. So the benefits of financial management are to reach your goals by making good decisions, okay? So you need to know your profitability. You need to forecast your growth, plan for diversification, new product lines, and reaching new markets. Prepare for financing, which would be loans.
That brings us right into our next topic, or the first topic that we'll really be diving into, which is budgeting. There are several ways that you can budget and manage your money, and there are different tools to help you use them. But let's just making sure that you budget overall is a very important practice. So the first thing we're going to talk about is a sample, basically kind of showing you how it's going to go. We go over different categories. What do you use? How do you track your monthly expenses? And how does this help you make decisions for your business going forward? Bookkeeping. It is so unfun, but so necessary. So a lot of businesses tend to forget how important it is in the beginning, because if you start on the right foot, in regards to keeping up with your invoices, keeping up with who you're writing the check, what you need to write off, and you're doing that quarterly, speaking with your accountant, getting good advice, you won't have to start over 2-3 years down the line when you're ready for a loan, you're ready for a brick and mortar space, or you're ready to expand your market, because you can't use Cash App. Cash App doesn't show credible tracking or anything like that. They need to show what you're doing, how you're doing it, what are your profits. They need to track everything. And the best way to do that is starting off from jump, and making that a habit from jump is bookkeeping. So here are the 10 basic steps that you can work on. If you guys need more information, definitely reach out to us. Obtain book accounting software. So one that a lot of small businesses start off using, or their go-to, is QuickBooks. It's pretty simple, low cost efficient, and it's pretty user friendly. Just having something to track everything so you're not manually having to write it out, it just makes it a lot easier. Another thing when having that is having a separate business checking account. So your business checking account should not be funded the same or kept the same place as your personal account. So you shouldn't be having business expense coming out with your light bill or your phone bill, or at night with your kids. We need to see clearly what your business is doing versus what you're doing. They should be separate. Your accountant will tell you that. Any bank will tell you that as well. Also, another thing, if you're writing checks, the same account that you're writing checks from, you shouldn't be keeping your money away, right? So say you write a check to someone and they want to do fraud, or they get a hold of your check. So they have your account number that holds the entire funding of your business, and they wipe you out. That'll put you at a far setback, and hopefully you can recover it all when you can just have a payroll account where you write checks or do transfers for, a main account where no one really has access it but you and the treasury or your accountant, however you want to set that up. And then a small one that I suggest that people get for taxes, because a lot of times when businesses start up or it comes time to pay taxes, they're scraping to pay that up. But if you're setting money aside all year round or quarterly, then it's easier to keep up, and you're not feel like you're digging yourself out of a hole every single time. So I know that was a lot, but it's definitely necessary just to start out on the right track, and it's easier to keep it flowing and get better as time goes on. For the next thing, we'll move on. Basically, that piggybacks on what I said earlier. Just writing checks. When you write a check, it's easier to track it. Oh, you're not going to remember what you did 3 months ago. You're not going to remember every single, okay, what was this paper for? What did I buy foil for? What project was that for? You're not going to remember every single thing. So if you write those checks, not only do you have account of it, your accountant and the IRS has account of that as well. Business credit card, we'll talk about that later. Pay your business expenses first. Just like what you do with your bills, the same way you run your household is the same way you should run your business. Pay your rent or your mortgage, pay your bills first, and then what you have left goes into the extra, goes into the marketing and things like that. But the necessary things go first. Generate a use of a profit and loss statement. You can work with your accountant, and usually they can produce those for you, or they can show you how to do it. It's pretty simple and straightforward. And then don't forget to pay yourself.
Okay, so financial management software. So easy to organize and complete daily accounting tasks. There are several software programs that you can use. QuickBooks was one of them. Creating accounting reports such as cash flow statements help you track the financial health of your business, and do not use paper to run your business. Use software to stay on top. I know ADP and Paycheck System, they do all of this for you, and even more. So there are great programs out there for small-time businesses to start out. So financial statements. Okay. So this is reporting about a business financial health and cash flow, right? So you need a balance sheet, you need a cash flow projection, which is called a cash flow statement, and a P&L or income statement.
And you guys, I know a lot of this jargon, some of you may be familiar with, some of you may not, but that's why it's so important not just to rely on yourself, but reach out to the organization, reach out to your accountant, reach out to the tax professional and ask them, hey, what does this mean? And a credible or someone who's really standing in your corner, they'll explain that to you. And some of them will go as far as showing you how to do it. So just make sure that you're utilizing your resources. You won't understand everything yourself.
So this is a snapshot of a business at a specific point in time. Okay, so these are the balance sheets. So I know that there is a cash flow projection sample, since we were on that, which is here. So what does the story tell? In your participation guide, there's pre-test and there are boxes where you can comment on what this is telling you, okay? So up here, there are total current assets, okay? Fixed assets, property, plant, and equipment, okay? So there are also liabilities and current liabilities. All of that total liabilities and owner's equity is 165.
So think about looking at this sheet, think about all of these fees that this business has to account for or pay for or reliable for, right? What if they didn't use a balance sheet? What if they said, oh, I know this bill is coming out. I'm going to pay this. Or, oh, I know I probably should pay my insurance. I need this. How do we ensure that we can cover each of these funds and make sure that everybody gets this money and ultimately cause less stress for ourselves? It's because everything done correctly or everything done with the plan in order will definitely cause you less stress in the long run. It is a little bit difficult when you first start out, but that's with anything. But just keep your mind on the fact that, okay, I get through this, this is going to help me in the long run. So it's a little confusing, but it's always worth it because you don't want to miss an insurance payment and then someone falls off a ladder on your property. You didn't pay your insurance. So now they can sue you and take your whole business. So these things are very important. Just making sure that you keep first things first and just take that time to learn these things.
What is cash flow? So there's two primary definitions, moving cash in or out of a business and balance of cash received less the amount of cash paid out over a period of time.
So basically they're saying how much money you bring in versus how many you have that you owe to other people, like those bills we talked about, that insurance we talked about, the rent space you have. Are you having more flow in than you are flowing out? Or are you having less flow in than you have flow out? Whatever that amount is, whether it's more or less, that is what your cash flow is. However, the money is moving in and out of your business together is called the cash flow.
Okay, and so if you guys ever need more detailed information about the cash flow management, you can always sign up for the Money Smart for Small Business classes. They go into greater detail on this. So a financial statement using assumptions to forecast. So company cash flowing in and out. So like Melissa was saying, how much money you're bringing in versus what it's costing your business to keep afloat. Future cash flow during a specific time period. Project whether cash receipts, project will be sufficient. Cover projected cash disbursements. Okay, so setting goals for cash flow projection. So you set sales and expense goals, determine break-even point. Plan equipment purchases for replacement or expansion. So whenever you're planning equipment purchases, you would want to look at lending, or if you're wanting to save up that money to purchase those things, you can do that also. Determine cash needed to purchase inventory for seasonal cycles.
While we're still here, it just a thought just came across my mind. So, especially when we have businesses that do products and they produce products, and it's not just digital income, right? So, a lot of times, business owners forget to account for the packing peanuts, the plastic they need, the zip ties they need. All of that should be included in regards to what you're going to spend or expense, and also in regards to setting the price for your product. So making sure you include everything is what's going to help keep your business alive. And it seems small, but that's very, very lucrative in the long run and really keeps the business running and gives you more realistic expectations for what your business is going to look like.
Okay, and so with that, you can always have a miscellaneous budget with your budget plan, just in case you do forget those things. That's where that cash would be coming from. How can a cash flow projection help? So track liquidity when at
Accrual accounting masks cash realities. So just making sure that you're tracking what you actually have versus what you need and what you want to see. So just being realistic with yourself in regards to what you actually need and what you actually have. That helps you set better goals and just as much as you can track everything. Like I can't say it enough. That's really where a lot of businesses fail in the first 3 years, not because they give up too soon or not because of the marketing. It's because if you're not tracking everything, you're not having the right expectations for yourself or for your clients. So you set yourself behind by not tracking everything.
Okay, so this is a sample cash flow projection. This is what I was talking about a little bit earlier. The first set of rows titled sources of cash document all sources of incoming cash, right? So that is all of your loans received, equity contribution, cash sales, beginning cash. And then we have the operating uses of cash. So people that you're paying, office supplies, contractors, labor, wages, payroll taxes, your license, insurance, travel. And then we have non-operation uses of cash. Okay, so that would be your debt service if you have a loan, equipment purchases, self-employment taxes, and your owner's draw. Also your inventory purchased.
So this is just a breakdown of, a sample. Everybody's going to look slightly different because everybody's going to have slightly different expenses, right? But tracking that, you can actually look at what you did last year. You can see what spring looks like for you. You can see what summer looks like for you. Realistically, like, of course, we all want to sell nice things, but say I sell, I don't know, swimsuits, right? I'm not going to sell as many swimsuits in the winter, depending on where I am in the world or how I market it, as I will in the summertime. But I'll be able to know what that number looks like if I'm tracking my sales. So last year I did about this amount. I grew about this much. So this is what I can expect to see round about this year. And you can plan going forward using that. Not having so much so your mind set on, oh, I'm going to make this, I'm going to make that, but just gives you a realistic idea of what you're working with when it comes to your business.
So cash flow projection, increase the number of items sold. To increase cash flow, the owner could, one of the following, increase the number of items sold, increase the price with inflation. You guys see that everywhere. Eggs were like $12 for one crate. Reduce expenses, change the timing of expenses, and save money to have sufficient opening cash to get through the startup period. Obtain sources of cash other than sales, like a line of credit. So that would be lending. Right now, we do have a business line of credit, and the first 6 months is 4.99 interest rate. Reduce or change timing of owner's draw. So you could keep, paying yourself short and putting it into the business, which you would want to do whenever you first start out. Buy inventory from vendor at lower price. So you would want to reach out to different vendors to see who could give you the better price, negotiate that way. Obtain credit from vendor, establish policy to get paid sooner by customers.
Another point I think that Bree just made, which is a good emphasis, because I know as business owners, sometimes we're in a hurry and sometimes we need stuff right away. Yes, but planning ahead saves you money. So going back to number 8, buying inventory from a vendor at a lower price. Say I have a food truck, right? And I don't know, I sell nachos and I run out of chips. Walgreens, I could go to Walgreens. I'm going to pay $6, $7 for a bag of chips versus going around the corner to Sam's Club, buying that in bulk. And when you buy in bulk and the vendor's price is lower, you can then increase your amount of sales. So it's the same product. You're not losing any quality, but you're making yourself more money by planning ahead because you know what that day is going to look like. You know what you need ahead of time. So just keeping that in mind and not just going with the short, quick. I know Walgreens is right there, but taking that time to plan everything you need so you're avoiding those runs and paying a lower cost and increasing your profit in the long run.
Okay, so P&L statement. It measures your revenues and expenses over a period of time. It tracks your profitability, whether the business is making a profit on what it sells. So your profit and loss is pretty much like your statement. So it would have your building costs, utilities, compared to what you're selling and how much you're selling. So this would give you an estimate on if you are profitable or not and what you would need to do to change that.
A perfect example, let's do something different. Let's use lip gloss for example. And we talked about tracking those small things that a lot of people tend to forget to increase in their selling price or to track for their profitability. Say I'm making lip gloss, but I pay for the tubes and I pay for the base. Okay. What about the oils? What about the thank you cards? What about the lids? What about the little fancy ribbon they put in the package? You have to include all of that and figure out a per unit price so you can actually tell, okay, it really takes me $7 to make a tube of lip gloss. So instead of selling them for $9, I should probably sell them for $14. It gives you a real realistic look once you include every single thing that you include in an order.
So a P&L statement shows how successfully the buying and selling process has been managed. Measures the ability of your business to grow, repay debt service, and support you. So the P&L is the most important report from your accounting and software program, just because it can show you what you need to change in your business. So this is the formula for a profit and loss statement. So sales, and you are going to minus the cost of goods sold. That equals your gross profit. But then you have to take away your overhead, which would equal your net profit. The next slide, I believe, shows it in more detail. No, I guess not.
While we're on the subject of profit and loss, the profit and loss 2 years is the basic information that when you want a business loan or you want financing assistance, that is the first thing they're going to ask for. Okay, well, we need to see 2 years profit and loss, and we need to see your end of year tax papers for the past 2 years. So if you're not doing that, again, you're selling yourself short. Though you make the money, though you may have, whatever it needs, People need to see it on paper. When it comes to business, nobody's going to take your word for anything. They need to see it in writing because the numbers don't lie. They don't involve emotions or anything like that. So it's straight, clear cut to the point. They use the numbers to calculate how much the value of your business is, no matter how important you feel it is on paper. What does it look like? What is it doing for the community? Are they going to get their money back? Because that's what they want to know. Are you going to be able to pay them back? Are you going to stay in business? Are your sales increasing? Are they decreasing? So really, really take what we're saying into consideration when it comes to doing things right as soon as you can, even if you've already started. Just as soon as you can, getting yourself on the right track so that you're not downward spiraling in the long run.
Okay, so I think on your guys' participation guide, there is a discussion. It's point 4, profit and loss statement. So you guys can fill that out yourselves. Does any problem stand out to you? Is the business well managed? What about the growth potential? So that would be something that you guys could put in the Q&A if you would like, and we can go over that. Business financing. So what is business financing? Financing is getting the money that you need to start to operate or grow your business. To start up your business, like Felissa said, you would need 2 years of paperwork showing that your business is profitable, right? So we ask for those taxes, your statements, your personal taxes. A lot of the times we do see a lot of business clients not get the lending that they need because they are putting the money in their pockets, or they are, cashing those business checks, which they're not supposed to do. Or Cash App, yes. So under the table kind of ways to get paid, but it does bite you in the long run. So your basic financing concepts is equity financing versus debt financing, right? So equity, which would be great if you guys own your home and you're trying to start up your business and you're not at that 2-year point, right? So you could do a home equity line of credit. That would be a personal loan that could start up your business, right? So financing working capital versus financing fixed assets.
Business financing. What are the do's and don'ts for small business financing? So invest your own money. You have to earn your right to borrow. Show that you're profitable. Understand how keeping working capital, understand and keep working capital. So understanding what that is and also obtaining that are both equally important. And then be lean on fixed assets. If you don't need a brick and mortar, if you don't need an office yet, don't get one. However you can cut your overhead, cut it down. Keep more in the profit, as much in the profit as you can. Cut costs wherever need be. Not violate, no, don't cut any city codes or violations or anything like that. But just making sure you're not moving too quickly and allowing your business time to grow. Understanding your financial statements. So both the taxes, the profit and loss, the cash flow, understanding how those works with, what is most important, what can be cut out, working with your financial institution, working with a financial advisor, or usually your accountant can give you good information in regards to that. And then understanding your collateral options as well. Some people like Bree just recently talking about using equity. Okay, do you own your home? Can you take out a second line against it? How serious do you want it? Is it a good idea? Is it the time for that? But also going into the next one, understand the risk for that. So if you're taking out a second loan against your house, understand the possibilities. Do your numbers show that more than likely this will be success? Are your numbers declining? Should you wait? Is this not the time? No grant. So just knowing and working with different nonprofits, different community organizations, they can inform you about grants, what grants are available to you, what programs are available to you, because not everything has to be a loan. Sometimes advice can give you much more than a loan can. And sometimes there are grants, there are different foundations who are wanting to fund businesses, especially small local businesses, because they want you to be successful as much as you want to. And then shop around. The first person you get to is not the person you have to book with. Weigh out your options, just like a doctor. Oh, you need surgery. You should probably get a second opinion first. Treat your business as serious as you treat yourself. So get expert advice, shop around, and just educate yourself.
Okay, so I think we've already established this several times, but steps for getting ready for a loan. Okay, so you have a business plan. You're going to include that profit plan. Know what you can afford. Study your financial statements. Check your credit report. This is a big one. I see a lot of businesses, the individual's credit report is not the best. So lenders are not going to loan you out money if your credit report doesn't show that you're able to pay back. So that would be your first step, is to get your credit report stacked up. We do offer that secure credit card that does help your credit. It's about 6 to 20 points a month if you utilize it correctly. Establish collateral options, show your equity contribution, and research your financing options. So researching your financing options, again, make yourself educated, reach out to several different banks, see what they can do for you, because banks fight over you, right? You are the client. So you would just want to look at all of your options.
Going back to the credit report and knowing your credit, as much as we do like or don't like, depending on where your credit is, your business credit and your personal credit are directly related. So you can't have good business credit and not have good personal credit, because they still look at your how are you doing your personal business? What's your credit score then? How many things do you have in collections? Who do you owe? Are you paying your bills on time? They're going to look at all of that to help your business credit grow. So they work together, right? So even if you don't have credit, it's never a bad time to start. It's never too late. It's better to have good credit and not need it than work for a year and a half to build your credit score when you need that funding or that credit line right now. So with that being said, like, yes, you mentioned we have the credit cards. Utilizing those correctly will increase your score. And it's something that we really need to focus on before moving too fast, is getting your credit together before you can work on your business credit. So just keeping that in mind, that they both work directly together.
So loan package. Common elements of a loan package: your business plan, right? Your business financial statements, current and your history, and also your personal financial statements, your personal and business tax returns. So like Felissa said, whenever you are getting that lending for your business, you are your business. You are the fundamental level one of your business. So if you are great on credit, your payment history is great, then that's going to reflect on your business.
That's right. As much as we like to separate the two, unfortunately, we can't.
No. Okay, so elements of a loan package: source and amount of equity contribution, your credit report, which we have talked a lot about, collateral. So what can you offer us to hold so we can lend you more money, right? So we feel more secure lending you money. Purchase agreement, appraisals, contracts, and estimates. There's a lot with lending, and it's a pretty big package whenever you're doing lending with businesses.
And a lot of times, especially with different lenders, like, yes, they'll lend you the money, but they'll have you come up with a certain portion as well. It's like, okay, yes, we can give you $20,000. Can you bring 5 to the table? So they want to see how serious you are, how much effort you're willing to put in, because again, that goes into your ability to repay, and you pulling your own weight in regards to what you're asking for. Qualifying for a loan. What are the criteria for qualifying for a loan? Good credit score, of course, above all else. Um, Equity contribution. What can you do? What can you bring to the table? Repayment ability. What is your profit and loss state? What are your predicted sales? What does it look like you're going to do? How much did you make last year? Are you going to be able to cover those costs and still stay afloat? So that would loan to value ratio. Basically, they're saying on paper, what is the value of your business versus the loan you want? Is it realistic? Is it more likely that we're going to get our money back? Is it more likely that you're going to drive yourself into a hole trying to pay us and stay afloat? So those are the things that they look at.
Startup financing. Okay, so we've got equity, sweat equity, business credit card, and family. So equity is simple. It is your money, right? Many businesses are started with savings from a day job or through the sale of an asset. Sweat equity means doing it yourself. Owners of startup businesses are often a jack of all trades. You put in the hours and cover many activities of your business rather than hiring others or buying equipment. Okay. Business credit card. We've gone over credit cards a lot. Family. Some businesses owners turn to their families for an equity contribution. A lot of people do this. You start up a small business, you don't have the means to pay or have a payroll, right? So you turn to your family to start that business.
Looking for a loan. So you've been tracking everything and you've been watching your sales, you've been working on your marketing. You pretty much are in the rhythm of things. You're like, hey, I'm ready to go into a bigger distribution center. I'm ready to get out of my office in my basement. I'm ready for something more. I need lending. Where do you go? So the first places that you should look are banks. And if not banks, look for different regional lending organizations. Some are online, some are brick and mortar. Just weighing out your options, like we talked about earlier. There's no one stop shop. Not the same product is good for everyone, and not the same payments or interest rate is going to be the same for everyone. So just shopping around and knowing where to go when you're looking for a loan.
So key points to remember. So financing is getting the money you need to start, operate, or grow your business. You definitely need to start with a budget. Sound bookkeeping is the basis for all financial management. So those two are very important, the budget and the bookkeeping. Purchase and learn how to use financial management software. 3 statements. Okay, so balance sheets, cash flow statements, and profit and loss statements. Provide a compelling story to describe a business. Separate personal and business records and funds. That is so important. That one I want you to remember, to separate your personal and business records. So with that business account, don't swipe that debit card at McDonald's or Quick Trip. Well, I guess you could do Quick Trip for gas, but you don't need to go out to eat with your business debit card. Factors that affect your ability to get a loan: your credit score, your equity contribution, and repayment ability, loan to value ratio.
Did you guys have any questions? I'll say that first. You want to stop sharing?
Yes.
Hold on.
Oh.
This keyboard doesn't like me. Did you guys have any questions at this time, or was there something that didn't make sense, or we didn't nail over the head quite a bit, or you need us to explain it a different way? The floor is yours.
I don't see any
Now or
Q&A
never.
yet, but we'll give them a time to get them on there.
Okay.
And if you think of some, they'll be back next week. You can bring it to the personal budgeting. Is that what we're discussing next week?
Yes. And even then, if you don't have any questions, hopefully there's something that you learned or took notes on that you want to revisit later. If there is any words or terms that stood out to you, just, even if you want to dive into it and do some research on your own, just looking at all your options and educating yourself is going to be key throughout the whole business process. Unfortunately, you'll never stop growing. You'll always be something new to learn, something that changes. So. And then we're also, open to feedback if there's something you guys want to see done different or you didn't understand or uh, wasn't exactly what you were looking for. Just let us know that as well, because we want it to be the best experience for you and the most educational as possible.
We got a question and it's for me. I can't find the participation guide. Where is it in the training center? So when you guys registered, you should have access to the documents in our e-center, which I can provide that link. And also, if you want to provide your email address, I can send it to you. Did we have any more questions for these ladies while they're still on? Okay, I don't see any more. I think we are going to call that a wrap for today. I look forward to doing this again in a week, exactly. I hope everybody can join us, and thank you again, Bree and Valissa. If anybody has any questions, feel free to reach out through the e-center. I'm actually going to send the participation guide to everybody that registered. That way everyone can have it in case there's other people that didn't find it. Bree and Valissa, do you have any closing remarks?
Yeah, I just want to say thank you again for having us. We really enjoy just educating business owners because nobody knows everything, and we all want to utilize our team rather than having to start from scratch and figure things out the hard way. Just chime in, reach out, ask questions, and we're more than willing. So we love to see you guys thrive.
All right. Thanks again, guys. Everybody have a good afternoon and enjoy your holiday weekend.
Bye. Thank
Bye.
you.
Bye. Thank you, guys.